discuss this further and try and dissect the tax angle to it, we have with us Ms. Sonu Iyer, the partner and national leader People Advisory Services at EY India, joining us. Sonu, hi, thank you so much for making time and speaking with ET Now today. Just wanted to begin by getting your first take as to what do you make of this latest announcement coming in. We definitely were surprised and shocked by it. Were you surprised as well?
Very surprised, and particularly this coming in the enactment stage, right? I mean, in the original proposal, we saw the change coming in for MLDs, but bringing in debt mutual funds at this very late stage was certainly a surprise. But I think they've kind of met the long-standing demand of banking industry. So to that extent, they've made some people happy.
Well, yes, made some people happy. Definitely ruined the morning for us. But just wanted to understand, what do you think would be the rationale of the government looking at this? Because I'm sure it's not about the increase in the kitty size, because it's not going to create a huge inflow in terms of the taxation for the government. What do you think was the rationale for it?
So my sense is they're bringing in parity between, taxation of interest from fixed deposits and taxation of debt mutual funds, because in character, the income arising from a debt mutual fund is in the character of interest itself. So I think that's the reason that they're trying to bring in parity between the two. So that could be the rationale. Plus the fact that they brought in market-linked debenture under the ambit of short-term capital gain taxation. It's the same principle, right? It's the underlying debt in an MLD, which they were trying to tax because they thought it was more in the nature of a derivative income and should therefore be subject to normal rates of tax. So that possibly is the reason for that.
Hi, Sonu. This is Vinny joining in as well in the conversation. And, I just want to understand now what changes after this, because how will people actually start evaluating this? What should we be doing then?
So one straight impact is that for investments that are to be made on or after 1st April, the parity, as I said, between fixed deposit and a debt mutual fund is there. So it's the same. They will be indifferent to where they put their money in. They could continue to keep it and hold it in an FD versus putting it out in a debt instrument, which they were hoping would get them a better tax rate. So that's one impact. And the thing to note is that for entry into a debt mutual fund, it was not just restricted to, high net worth individuals. It was not a very high threshold to enter into a debt mutual fund. So to that extent, it impacts all investors.
Okay, so the impact is coming in for all investors, and it's not necessarily only the HNIs that get impacted through this. But Sonal, I wanted to understand, there have been some precedents earlier as well as far as the, judicial decisions are concerned against this. Do you expect any sort of litigation to happen around this? It seems to have been passed in the parliament already, so it's no longer a bill. It's become a, act and law of sorts. But what are you expecting? What will be the way forward for this?
So I certainly expect litigation, because if you recall, there is a section 50, which is on, again, where the change was made, similar change was made for, and the courts in that case have held that, you can change the method of computation of the income arising from a depreciable asset, but the nature of the asset and the tax rate cannot be changed. So if people want to take advantage of judicial precedents that you talked about, that would be the case here too. So this could lead to litigation unless they make changes to section 242A, which defines a short-term capital asset. They make changes to 112, which gives the benefit of long-term capital gains tax rate. So unless, and 54F to, in terms of the rollover benefits which are available under long-term capital gain taxation regime. So unless there are corresponding changes made in all the other three sections that I just spoke about, the chances of litigation and controversy around whether or not this will actually get taxed as short-term capital gains, or we could continue to use the benefit of long-term capital gains taxation, will definitely ensue.
Thank you so much for that, for joining in with us, giving us an understanding on that.